Good yeah, it's Joel. I'm coming back at y'all with another video. So with this video, this is going to be a NAS100 recap for Thursday, July 20. So as I pull up Forex Factory here, you're seeing that at 8:30 there's the unemployment claims news, which is perfectly fine to trade. A lot of times these news don't really deliver like pristine setups. Um, but I'm still behind the charts for them just in case they do, you know. So Thursday is a trading day. Friday is also a legitimate trading day because there's no news for that day. So we'll just jump right in. So here for Thursday, we have the 8:15 to 8:30 candle. We're on the 15-minute time frame. So at this point, we want to mark the most obvious swing highs and swing lows for our liquidity pools. So for the swing high, I will choose this high over here just because this candle right here, this is still within the New York session, and I would like to have a swing that's prior to the start of the New York session, which would be this high here. As for sell side liquidity, it gets marked with this low down here, right? Just because this swing low, you're seeing it clear as day within the London session. So at this point, we have both of our pools, so now we can jump right into the 1 minute chart and begin to stock price to see what happens. Um, so this next candle here, this is the 8:30 candle where the stop hunt begins. So we'll just fast forward a little bit. Okay, perfect. So with this wick here at 8:40, we're seeing that it activated sell side liquidity. So probably the first trade of the week that sell side liquidity was activated first, right? So nice little change of scenery for once, so you guys can see this as an example too. So sell side was activated. Now we pretty much um, don't really care as far as what price decides to do. At this point, we want to see price, range under sell side liquidity, and then after 9:30, see a deeper push, create a new low, and then hopefully break structure to the upside, deliver us a fair value gap entry and take the trade in a buy up onto the buy side liquidity. So at this point, right, because sell side liquidity was taken um version 2, I am immediately bullish, right? Like I have a bullish bias. I'm only looking for buys. I'm not interested in selling price at all. So once you're able to determine your bias, you pretty much that's already half the battle. That's most of the battle, right? You already know which direction you want to take it. So all it is now we're just waiting for 9:30. So you're seeing new lows get created, which is great, right? We want to see after 9:30 a new low get taken or created, sorry. So next candle is a 9:30 open, right? So this large candle that just formed, this is the 9:30 open. So I'm just going to make it super clear and super simple for you guys. Um, right, so I've highlighted this is the lowest low that was created in this session, right? We're waiting for another push below because 9:30 just opened. Want to see a push below so it can clear this low and then deliver us a break of structure so then we can take price up to buy side liquidity, which would be our final target for a buy. So if price doesn't ever come down and clear this low, I'm not interested in trading whatsoever, right? I'm waiting for the market to give me what I'm looking for. Otherwise, I'm not engaging in price. So we're seeing an aggressive push up, but it didn't clear buy side liquidity. So right now, everything is still valid, right? We're just waiting for a push under. So price is getting super close to the buy side liquidity, but as long as it doesn't clear it, um, we should be fine. Now, at the same time, I also don't really like to see like when price came down and cleared sell side. I don't like to see price make such an aggressive move up like this from where we began to the highest point in price. This is probably like 90% of the whole move. So in actuality, price is actually going up and clearing a lot of the internal liquidity, right? It's clearing the highs here, this high here, it's tapping into this imbalance, right? So this is not really ideal for us just because we would want to see all these, highs and, imbalances, all these liquidity pools. We want it to remain in place so like price has a reason to fly up. But if we're technically following our confirmations, then this would still be a legitimate buy if price pushes below and gives us a break of structure to the upside, just because this liquidity pool still remains intact. So once again, we don't really care about what's happening with this price action all in here. We want to see this push below. So got a clear. So, right, we see this wick came through. So now it made a new low. So now what we want to do at this point, we want to mark the most recent swing, which would be this level here. So, right, this isn't a swing here because this candle is higher. So this is the most recent swing after the liquidity gets taken down here. So we would need price to go all the way up here and break structure at this level in order for us to take it for a buy, which at this point, is not really ideal. So this really isn't a desirable setup. So we'll just continue essentially stalking price to see if it delivers us another swing. All right, so this candle here cleared this low, right, and it left a swing. So this would now be the most recent structure point and price that we would like to see get broken. So great, we're seeing the low get cleared and then a structure break at this level. So now the at this point we would need to mark a fair value gap between the displacement range, right, from the displacement high to the displacement low. We're seeing a break of structure, bullish, and now we want to find the fair value gap within this range. So most obvious fair value gap we see is at this level right here, right? So if I look at the 2 minute, 3 minute, right, no gaps. Um, so we do see the gap there. Not really a desirable trade just because this is, a good gap on the smaller side, but it is technically um, a gap. So if you were to take this trade, I'll probably do like half risk realistically. Right, you can have your entry set here, stop loss at this level, and then take profit up here. Like I mentioned, it's a smaller gap. So I mean, when this was happening in real time, I personally didn't entertain this trade. And you see here, price broke structure, and well, it continued going bearish. So this is why you have to use your personal judgment on this, right? For me, when this was all happening in real time, I didn't take this trade at all because I felt like this gap was, on the smaller side, even though we did get a break of structure bullish and it met all of our confirmations. Um, this is not a trade that I decided to jump into, especially because like on the 2 minute and the 3 minute there weren't really gaps, and you couldn't even use, like, you couldn't use this gap up here because this fair value gap technically fell outside the range, so it's pretty much just this smaller gap. So realistically, let's just say hypothetically, if you took this trade, this would have resulted in a loss, which once again is fine. Like, losing is part of the game, but me personally, I didn't take this trade because I felt that the gap was um, just a bit on the smaller side, right? Like, price left like a pretty large wick. Um, so it was just one of those situations where I guess, experience kicked in, and I'm like, all right, well, this really isn't like an ideal uh, setup to take, but hypothetically this also could have been a loss here. So you see price comes down, clears out this low again. So this would be the last structure point. Actually, sorry, this would be the last structure point right here because this low got cleared and this was the last swing. All right, so now we just continue stalking price. Right, we see price made another push down. We move the light bulb here. So we're still stalking price um, to take it for a buy. So same idea here, right? Another low was formed. We got the light bulb at this level. Then we just keep following price to see if it makes any more swing lows, or sorry, swing highs, I guess. So any more structure points. So at this point, this is 10:42. So we're nearing the 11 a.m. mark, which after 11 a.m. I don't take any more trades, right? So this candle right here is 11 a.m. At this point, I'm done with my trading day. So like I stated earlier, right? Well, this is the last structure point here. Price just kept going down. and it never made another structure point since then, and price never came back up and cleared. And even if it does eventually clear, it's already 11 a.m. and you already see prices slowly creeping. Like price like melted aggressively, but then it's slowly creeping its way back up. So it wouldn't even be desirable to take a buy. So at this point, the the day is pretty much done, right? There's nothing for us to trade. Now, once again, if you took a trade at this level, you know, this would be a trade that would have met all of your confirmations. Now, I think this was a situation that with me, it was experience that kicked in as far as like this move, this expansion move, taking out most of like the internal liquidity, not taking our target, but taking out most of the internal liquidity, and just seeing that this gap, even though price shot up and cleared this swing high, technically breaking structure to the buy side, I just felt like this gap was just on the smaller side. That like price, would obviously tap into it, react to it, but like a lot of times price doesn't always respect these smaller gaps. Now, if it was like a much bigger gap, then that would have been a different case, right? I would have entered the position, but when this was happening in real time, I just had very little interest in taking the trade, so I essentially opted not to, just to see what would happen, and you see price came down and broke structure. So you took this trade, you're still a successful trader, just because you followed your rules, right? Your rules says enter at a fair value gap, and this is, in fact, a fair value gap. Is just not the size that you know I would I would prefer a much larger fair value gap. So this was just one of those situations where in real time I just opted not to take it, just because I was like a little sus about it, and it turned out to help me avoid a loss in the marketplace. So it comes with time. Not necessarily saying you wouldn't have been wrong if you took the trade right. It just would have resulted in a loss, which is fine because in trading, right, losses are part of the game. You won't avoid the loss, and you shouldn't even concern yourself if you took a loss here, because when we do win trades, um, it'll pretty much make up for the losses and more. So successful traders, they have four types of trades. Here it is right here. So the difference between a successful trader and a losing trader, right? So the only difference between the two is that the losing trader allows themselves to have big losses, while successful traders don't allow that, right? Because they follow proper risk management. They know exactly how much they're risking. They're following the trading plan, the strategy, right? And they're following to the T. So at this point, if I would have taken this trade right here, it still would have been a successful trade because I'm following my strategy. I'm following my trading plan, and this would have been just a scenario where the market just didn't give me the trade, which is perfectly fine, right? Like that happens. That's the cost of doing business. So this is why you shouldn't have concerned yourself, right? If you would have taken this trade right here, right, it would have resulted in a loss. But think about it, right? If this trade panned out, right, this would have been a 1 to 5.5 risk to reward. So all you really need is one of these trades, and it can erase several losses, right, and still have you walk away with profit. So that's why we don't really concern ourselves with minor losses, especially when we've been seeing that the market virtually every single day would attack both buy side and sell side liquidity, right? Like this stuff just keeps repeating. So once again, at least for me, this was a non-trading day because I didn't take the trade right here. I just didn't take the entry just off of experience. I just didn't feel like the gap was um, big enough or like ideal for me to want to take the trade, and so that helped me avoid a potential loss. But if you have taken that trade anyways, you still would have been successful with this strategy. And that's something to be happy about, to walk away with, saying that you only take the trades following your strategy, right? You didn't deviate from the plan, because the plan, the blueprint, that's what's going to make you successful in this industry. So that was pretty much the recap for Thursday, July 20. Please let me know if you found this helpful. Do leave a like, subscribe, leave a comment if you have any questions with anything. I do want to keep pumping out this series, so just gonna keep this going for you guys. So once again, it's Joel, and I'm out. Peace.